following content is an update and technical analysis on Anheuser-Busch InBev, a company of the consumer defensive sector in beverages and brewers, here off the daily interval. And right in my previous video here, I had mentioned I had favored a nice bounce off the 53.88 price support, which was a strong element to the weekly interval in a potential counter-trend snapback rally. Usually you will not just have a straight light down without some initial snapback and or counter-trend rallies here. And that's what we favored in that previous video. And here's the update. Oh, we ended up coming in pretty close here. We ended up looked like we were going to sink right through it. We ended up back testing it. Second day in a row, we ended up back testing once again. And then we opened right amongst that 53.88 price support there. That's your objective entry long trade setup. And for a nice clean day trade, just in a single day there, that was good for 1.7% in gains and a continuation rally, at least to the peak of 3% there. And now Anheuser-Busch resides in a peculiar formation and or position where you have a very large wave of volume in price at price profile here. And this is what I see now. This is an updated chart here where I see a potential bear flag continuation pattern potentially panning out, where we're sort of flagging here. And where I get that is we will have a perfectly flagpole bearish continuation down to that 44.62 price support there for another 20% crash there. So if you measure the top of that pole off that bear flag, that is a nice, clean, perfect measurement down for a 20% drop. And then again, the continuation of that flagpole would be a perfect, darn near perfect measurement for another 20% crash on a revisit of the October 2022 reactionary lows. And we also have a potential bullish oscillator and MACD where you have an oscillator histogram. Usually what happens in these instances is not only is it a crucial inflection point for the technical momentum indicators, but what will happen is that it usually marks just a pivot point among that realm, and it could very potentially cross over. And if it crosses over and it maybe takes out those previous highs right there, enters that gap, it completely backfills the gap of that gap support and blows out the flag there, then obviously that's a potential there. That is nice gap resistance coinciding with the 200-day moving average for an additional objective entry short. What will completely determine and dictate that move is if you have, aside from the crossover, when you have a peak, a real strong peak of this nature, you could have a complete churn to the upside, slip and slide off the sell signal lines and the exponential moving average. And then you have a complete disruption of that crossover. And if that happens, again, these technical momentum indicators are already damaged, heavily damaged, and do not underestimate how quickly and how oversold some of these momentum indicators can get.